Futures point to a higher open in front of jobless claims. Other economic data to be released includes February PMI, auto and same-store sales, personal income spending, and construction spending. Gold rebounds following a 5% drop, its biggest one-day drop since Lehman's collapse in October 2008. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the morning call. We have a huge day on tap. First day of the month, same-store sales. It's that big Thursday. February PMI, we're going to look at jobless claims, but that same-store sales report is going to be really important because we're going to take a look at the consumer following Bernanke's comments yesterday.
Yeah, I think that the market wants to see the trend of positive economic news, and this positive economic news was actually supported in the Beige Book yesterday. The question, though, is as the positive data keeps coming out, what does that mean for the Fed? What are they going to do? Are they going to continue to do QE? And yesterday, Big Ben alluded to the fact, testifying in Congress, that there might not be a QE3. That's why the market sold off a bit, and that's why gold sold off a lot bit.
Right.
So we'll get into that chart as we go. But the first things first is yesterday we had our first distribution day in the market in a while. Nothing severe, just a day to take notice. If you look at the chart here, you will see that this accelerated uptrend is still intact. December 20th, you had your gap and go. This is when the market followed through to put the rally back on. And ever since then, you see this line here, we've been following the 10-day moving average. I talk about it all the time because of the importance, following this uptrend. So yesterday, you had a mini outside day. So the question is, what happens thereafter? Lots of times you have an outside day and it leads to absolutely nothing. Here you had an outside day, it led to a 3-day decline, about 30 handles, nothing too severe. So the question is, with everyone calling for a correction, does this lead to more downside action? At this point, you don't know, the futures are up. But if we start to take out this 10-day, maybe it happens. But until then, the trend has still been very strong.
Right, I think if anything, we're just going to look at that relatively unconstructed trading, those real tight ranges. We haven't traded a 10-handle day in a long time. Before we move into the sectors, I want to take a look at GLD, Scott. Gold down yesterday, 5%, its largest drop since the Lehman crisis in 2008.
Well, the severe decline in gold actually made yesterday feel worse. It actually put some fear out there that, oh my goodness, you have one huge down day in gold that wipes out 2 months. Right. Maybe that could happen in the market. Maybe the market's being too complacent. So that's why I actually tightened up some of my longs. But if you look here at gold, a lot of people are saying it was a fat finger trade. Some people are saying that it was an algo. But the bottom line here, whatever it was, if you didn't get out of the way, you got hurt. Look at this huge down day that just engulfed like 2 months worth of work here, or maybe like 6 weeks. So what I will do moving forward is I want to use my retracement rules. That'll tell me whether or not this huge down day was an over-exaggeration. What was that?
Exaggeration.
There you go. Or, it means that the direction is going to be lower. So what you do is you look at your retracement rules. If gold bounces back or the GLD bounces back to this 0.38 to around just say 168 and can't get back above it, that'll show me the strength of this move, and that would tell me we're going to get more downside continuation. If we all of a sudden start working our way back, take this out, then you know that this was a little bit too extreme and it doesn't really matter. So I'm going to probably try and short a little bit of the GLD if it could bounce up to that 167.5 mark to see whether or not you could short a bounce for some type of continuation there in the GLD.
Moving along to our sector spotlight, keeping on that theme of macroeconomic data, we're going to take a look at check the temperature of all the sectors today, and we're going to kick it off with the XLF. It was down about 4% yesterday, and again, as Scott mentioned, we don't see any sign of continuing QE.
Yeah, well, with the banks have been strong, and we've had some good moves in JP Morgan, Wells Fargo, Warren Buffett, thank you very much. I was long JP when he said it was in his PA. It did very well. If you look here at the XLF, I'm not too concerned yet. But you did have an outside day here. It tried to break above resistance, close below. Sometimes that leads to weakness. You've seen a big move in the XLF, so you just want to notice this. It's still above the 10-day. A few times it's tested the 20-day. So at this point, just watch to see what the action here is moving forward. Maybe it tests the bottom end of the range, but if it doesn't, the XLF still looks good. And some of the banks in that group, especially JP Morgan, I think you could still stay with for a bigger move, later this year.
Another group testing the 20-day moving average. We're looking at the XLI. This one had 3% increase in inflow week over week.
Well, this group also has been trading with the S&P. It's been a very nice hold. So it's nothing too severe yet. You take a look at this chart also, you will see that, nothing too out of the ordinary yet. You had a few nice moves here. This is when it broke above, your resistance for a nice methodical trade higher. It's still in this channel up here. It's just getting a little sloppy up here. There's no real momentum. Sometimes you have momentum, sometimes you don't. Right now, it couldn't take out resistance, so I think as long as it stays above this area, you stay with it. But if it starts to break the lower end of this channel, you could get a correction here just like everything else. So, stay tuned there.
So we saw the inflow coming into the XLI, but we're seeing some outflow with the OIH, which, Scott, you've been a fantastic call since 2012. Kramer calling you out with off the charts with this one. So we're seeing some outflow here, and we're testing some key levels of support.
Well, in this one, you just got to know your time frame. Okay, we started talking about this in December. There's been 3 viable strategies here. Okay, and it just eclipsed the last resistance. So sometimes you test it and sometimes you correct. So know your time frame on where you want to stay with it and your tier system. If you look at the OIHs, you will see this is the pattern that we talked about on the chart. Here you go to the chart of the OIHs. Left shoulder, head, right shoulder. This is when we were on with Kramer talking about your tier 1. This was your tier 2. And then this is that last area for tier 3 that really wouldn't have worked so well. So now if you look here closer, okay, you have an uptrend that we've been following. Nice and methodical. If you're a short-term momentum trader and you don't want to sit in on what could be a pullback, if we break below yesterday's low, you sell some, because you could have a move to test 42, and then maybe you could even have a move to test this moving average, the 50-day coming in right here. So if you're a macro trader, maybe get to tier 1. I think you could hold it and potentially buy some more back for a bigger move later this year. If you're a momentum trader, you could sell here and figure it out on the pullback, but just know whether or not you're quick enough that if you sell, you're going to be able to get back in. So just know your time frame there.
Right. We're going to hear a lot about the consumer today when we hit same-store sales. So we have to take a look at the housing sector, and that's ticker HGX.
This group has been unbelievable. I think we did this with Kramer also about 2 months ago, and the move has been so fast and furious that people are saying, wow, this might be indicating a real recovery in housing. I hope so, because I just closed on my house in Short Hills. Yes, I did get the mortgage and I'm moving. My wife's very happy about that. Anyway, you go to HGX, you will see that it's been a really, really nice move to the upside. Very methodical. You've had participation from Toll, from a lot of the home builders. You've had beta there, and at this point, it's definitely a little faulty or maybe a little long in the tooth. Who knows here? But as long as it stays above this area, I think you stay with it. If, again, you're a momentum trader and you don't want to sit through what could be a little bit of a pullback, it breaks this area. You then have really big support down here at the 50-day moving average, and that's more of the pull-in or compelling area to buy if you're looking to just buy the dip. But I don't think you exit fully. Just don't be in heavy right here at this juncture.
Right, and let's round it off with GDX. This is the minor ETF. So obviously we had to talk about after the big 5% drop in gold yesterday, but you know what? Before that, gold's had such a monster run. The GDX has been lagging behind it. So this one's interesting. Take a look.
This one I always used to talk to Alex about. She used to always try and get bullish on the miners, and they just...
The miners are tough because they're small.
They're small, and mines blow up. They're always doing secondaries. Right. So if you look here at how it's been lagging, I talked about the potential of a double top and how it would be bullish if it takes it out. So you look at the chart here, it went right up to that area, okay, and sold off hard. Okay, at this particular point, it's still in the same trend. You still have a low or a higher low, another higher low, so maybe it tests it as well. But for me, I'm not in these. I'm going to avoid them. I don't like the way it trades. But if you have to be in it, I guess trade it versus 54, which should be big support. If it breaks that, you're definitely looking at lower prices in gold, because sometimes that tells you something there.
We're going to hop into a quick commercial. When we come back, we're going into the trenches with my 2012 pick.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to your morning call. We're going to jump into the trenches in the ag space. My 2012 pick, Mosaic being my favorite stock. I love the supply and demand story. I think this is firing on all cylinders. Back half 2012, we saw a little bit of consolidation. There's some news out of India on the overnight that they're going to cut back on subsidy spending. So consolidation is healthy here. Might be some nice opportunity to get in and lower entry points. We're going to kick it off with Mosaic, followed by CF, which Goldman is calling their 2 favorite picks for 2012.
All right, so Goldman's joining the party. Usually they're a little late, but at this point, you know what? There's still action here. So
there was a lot of brokers last week and the beginning of this week talking about the ag space. They're really warming up to it because we had that back half story.
Well, you know what I also saw, which was an interesting headline today just out of North Korea, that North Korea said they're going to they'll start doing less of their nuclear program for metric tons of food. So obviously for food, and we're going to feed the world, you need fertilizer to keep it going. So it's just part of the story, and I saw a headline, I figured I would point it out. But right now, look at the chart of Mosaic. That's what's important here. You know, you had a great call. I think it was well into December, saying you like to buy in the weakness. We talked about this downtrend. This is where you get involved when it breaks above. It's had a nice methodical move. And then yesterday, a little bit short-term potent down day engulfed this bull flag. So I think that takes off the table of momentum above 60 for right now. I do think if it holds in here, you stay with it. And just watch this trend line right here. This is where if you sold yesterday because you saw this faulty little short-term day, you could buy back right into this 54.5 level for some continuation at the second part of this year.
And let's take a look at CF in conjunction with Mosaic. You guys were trading this and had some fantastic calls with it in 2011, especially. It was a monster for, especially you guys are momentum traders.
Yeah, well, we look to find relative strength. We like stocks breaking higher, so sometimes it's hard for us to accumulate it on weakness and anticipate. But if you look at CF yesterday, you'll see that it tried to break out, but with the market weak, it couldn't. But overall, it's above the moving averages. All it might just need is a little bit more time. It tried to break above this resistance. I think I drew this line back earlier this week. We were talking about a potential breakout. Couldn't go there. Down day yesterday. I think watch this area. If it stays above this, what is this, about 182, that's going to show you a lot of upside momentum. If it breaks this area, perhaps you get a retest of this 169. But if we don't go lower in the indices, and yesterday's outside day means nothing, it could take out this high sooner than most people would like to think, and then there's no dip to buy.
What's interesting too is we've been talking a lot more with your traders getting involved with dividend names, so that they're paid to hold some of the stocks a little bit longer. Mosaic just took up their dividend 150%, and like we've been talking about, since I started working with you, large cap names, large cap tech names, we love them because of the cash and they're starting to pay dividends. Now we're starting to see that happen in the fertilizer group. Moving along to AGU, down about 0.50% yesterday.
Yeah, I haven't heard many traders talk about this, so I actually want to put up the chart and see what it's doing. I do hear a lot about Mosaic and CF and even POT. This one, not really. At this point, it looks okay. I guess, it's been a little sloppy. It's still above the moving averages. I don't think you need to trade all these. For this one, I would say it was a nice trade when it broke this downtrend. Watch this area right here. If we do see a bit more correction in these ags, and it breaks this line, I'd rather see you buy it right around this 77 versus up here. But again, everyone's looking for a correction. If it doesn't happen, you have to stay with it. But this is an ascending channel, and when this does break, or if it does break, typically you could buy at better prices.
Speaking of ticker POT, this one hasn't really been participating with the rally in these names. We're seeing some relative weakness here. Do you still continue to short this here, Scott, or is it good levels to get involved?
I don't think many people have been shorting it. They're just like kind of staying away. At this point, shorting has been tough. It's been hard money. But you also don't need to be long everything. If you look here at POT, it's been an underperformer this year. I think I've heard so many downgrades on this thing. But at this point, it's had a move off the lows. It's still rising somewhat. I would say if it could hold in there, maybe I'll hear my traders talking about it if it tries to get above this 48 for momentum. Above 48, it looks a bit better. I would stay away from it, but through that level, if the market gets stronger again or holds in there, that's your resistance that momentum can come in for.
Let's round it off with Farm Equipment, CA2, you, Kramer, Stephanie, always talking about Caterpillar, Deere, those names. Farm equipment, that demand is out there. You need the machinery to be able to get these crops growing.
Yeah, this stock was, last year, was a core trade, and it traded above a major resistance. And now, ever since earnings, it's been sloppy. I've tried to play this a few times, trying to buy it at, I think, 114.50. Every now and then you get a decent trade, but it hasn't been accelerating up here like a lot of other things because of the distance it's traveled. If you look here at CAT, you will see, last year, we talked a lot about this channel. Okay, this is when it was in a channel consolidating. It was trying to consolidate this big move off the low. So this was really your entry. And now this was your earnings, okay, which was sold down briefly. And then this was that trade I was trying to get above 114. And look at where we're like 2 weeks later, and it's still right around there. So it's a little bit frustrating. As an investment, stay with it. As a trade, I just don't think it's going to give you the momentum that you're looking for. And watch this area right here. If it breaks this 114 and the market wants to correct, I'd say this 104 is huge, huge support, but we have to obviously break that one first.
Moving along to quick hits for some quick cash. It wouldn't be a morning call if we didn't talk about Apple. This name is just an absolute monster. Again, trading it 10 times. It's real cheap. There's lots of cash on the books. It's up like, I think, $4 in the pre-market. Again.
Yes, it's like all you have to do is just own it, own it, own it. And every sell has been a bad sell, but a lot of traders are prudent. A lot of traders take profits, even me. And lately, it's been so fast, it's been hard for me to wrap my arms around it. But if you remember, you look at the chart here, okay, there are ways to invest in this type of move. This was earnings. If you remember, this is actually when I said you get involved because we held this earnings gap. That was a strategy. then here is where you could have added for momentum. And I think I actually sold my stock into this move, and then I've been trading it since, and it just cleared the high from that engulfing day right around option expiration. And yesterday you had a doji, so short term, if you're a trader, what some guys might do is short versus yesterday's high. Let me get my little quotron here. You'll see yesterday's high was yeah, my little,
old school today.
There you go, my handy little tool belt. 547.61 is yesterday's high. If it pushes through there, we could see 550 plus today. Obviously, the drill. If it pushes through, comes back below, you could try and fade it. Yesterday, at the end of the day, it got choppy. That analyst on TV said, was calling a top on it. It came off, and then $7 later, 5 minutes later, it squeezed everyone. So it's a little dangerous right now. As an investor, you could stay the course, and it's always nice to take a little profits. As a trader, just make sure you have some type of strategy, because when it does pull in, if it does, you can get caught like that day, a few weeks back. But if you're trying to short it, you better have a plan, because you've been getting your what squeezed off.
So we already spoke about the GLD. We're going to take a look at the silver ETF ticker SLV. This one was down 6% yesterday as well.
Yeah, this one got hit really hard as well. It was very violent. If you want to look here at the chart, you will see, it wiped out so many days of upside action. And at this point, you look right here, that's why there's a time and a place. This is when it broke its downtrend with a potent move, continued, consolidated, moved up into resistance. I think we drew this the other day, and look at the size of this move lower. So at this point, it's retesting this area. If you want to be long it, because some people want to be long it, try and be long versus yesterday's low. But again, just like the GLD, if it doesn't take back more than a third of yesterday's down move, it'll probably control the direction moving forward.
Moving along to Wynn, you love talking about these casino names. In fact, we had Kramer with you Tuesday off the charts talking about Wynn. And you know what? February gaming numbers, Macau, it looks like gaming revenue is going up again.
Yeah, LVS 2 days ago was a great trade. It traded above 54. That was my buyable pattern for momentum. I think yesterday it hit almost 59. Wynn is more of a trading vehicle, and I like the pattern right here. It's trying to break that downtrend. I'm long Wynn also. If you look here, let me show you what I'm looking at. Basically, here is a big downtrend that's been controlling the stock. Yesterday, it cleared this mini one, so I did get long, and I would be buying more above yesterday's high of 119.84 for continuation. If we close above 120, next big area of resistance is around 130.
All right, let's round it off with my favorite banking stock, ticker JPM.
Yeah, JP Morgan. Last Friday, I bought back when it tested the 20-day. I added, I think, the day that Buffett spoke. And I trimmed a little bit yesterday, just a little bit. I'm still long it for a bigger move, but that's why you could use a tier system. If you look at the chart here of JPM, you will see it's had a nice move. This is why when I wanted to add to it, breaking above resistance, which is what I like to do for momentum. And then I sold into yesterday's strength. And I think as long as it holds above this, 39-ish area for a little while, I'll probably buy some back. But if you look overall at the move that it's had this year, I see some resistance coming right in here around 40. So this is going to be a little tough. So I wouldn't just be jumping in up here, but I think you could stay the course as a macro investor for a bigger move this year. For me, though, here's a buyable strategy. Buying in this was okay, buying there, but I'm a seller into this 40 for now.
All right, looks like you guys have a lot on tap for today. Don't forget, every day, real money, options, profits, and T3Live.com. Scott, Mark, Evan, and the team wrapping up the charts for you.
There you go. Have a great day trading today.